class we will focus on cost classification. The term cost in accounting is usually never used as a standalone entity, but usually it is adopted together with an adjective that further specifies the kind of cost we are dealing with. Specifically, we can identify three different classifications of costs. The first one is the distinction between direct and indirect. The second one is the distinction between product and period, while the third one is the distinction between variable and fixed cost. In this class, we will focus on the first two classifications. So let's start from the distinction between direct and indirect cost. So we have the direct versus the indirect. A cost can be defined as direct if this resource can be univocally and exclusively assigned to one unit of our cost object. So if we have our example, so if we have our table as a cost object, the direct cost is represented by those resources that in a univocal way can be assigned to the realization of one unit of our table. So we will have as a direct cost the wood, because we can identify exactly the quantity of wood which is used in order to realize one unit of our table. Another example is represented by the employee. Which kind of employee? The employee that is directly involved in the realization of the final table. So someone who is physically in charge of realizing the final element. And the reason why is because he's involved physically in the production process, so we can define the time devoted to the realization of the table and so at the same time the cost. So if we want to generalize with respect to a manufacturing company, the direct costs can be defined as the cost of direct material and as the cost of the direct labor, because we can identify exactly the amount of these resources that can be used in order to realize one unit of our table. We have the opposite instead if we have indirect costs. In this case, we are talking about resources that are used jointly in order to realize more than one unit. So again, we have resources that are absorbed by the final product, but they are used by more than one product. For example, we can have, in the case of our table, the equipment. In this specific case, we have the circular saw, and basically we can say that this equipment is used in order to realize more than one unit. So it is used for realizing not just one table, but several. So this is used jointly by more than one final element. And the same happens like if we have some commercial cost, so for example the marketing or the commercial activity. So the man who is in charge of selling the tables, he will be in charge of selling more than one unit. So we can say that these resources are indirect because they are absorbed by more than one unit of our output. We can say that these indirect costs are also defined as overhead, which is written as OVH. And basically, again, with respect to a manufacturing company, we can distinguish overhead between the so-called manufacturing overhead. So in this case, we have indirect resources that are related to the production process. So for example, the equipment, or we can have the supervisor within the production process, we can have the depreciation of other instrumentation, the cost of the setup, so all of the resources that are involved in the production process. Another category of indirect cost is defined as non-manufacturing overhead. Non-manufacturing overheads include something like selling expenses, general expenses, administrative expenses. We are talking about resources which are, again, indirect, and moreover, they are not related to the production process, so the marketing activity, the selling, and the commercial. This is the overall distinction between what is direct and what is indirect. We have also a second classification that distinguishes between product cost versus the period cost. So again, what's the difference between product and period? Let's start from an example and then generalize. Assuming that our cost object still is represented by our table and we want to distinguish between the production cost and the period cost. The product cost can be defined as the value of all of the resources that are involved in the production process, which means in the transformation from the input into the output. So we will have again the direct material, because of course direct material are the initial resources that are transformed into the final product, so they are production cost. Then we will have the direct labor. And the direct labor, again, represents a production cost because we are talking about employees that are physically involved in the transformation of the raw material, in this case the wood, into the final product, so into the table. And then we have a third category of product cost that is represented by the so-called manufacturing overhead. Because by definition, the manufacturing overheads are those resources that are used within the production process. So employees involved in the supervision of the production activity, depreciation of machines, equipment, lighting, heating within the departments, everything which is generally related to the production but not to the realization of the single unit can be defined as manufacturing overhead, and by definition it can be defined as a product cost. You can imagine what we can have as a period cost. On the other way around, the period cost includes the non-manufacturing overheads. So non-manufacturing overheads that can also be defined as selling expenses, general expenses, administrative expenses are also defined as period costs, and the reason why is because they are general expenses related to the overall activity of the organization but not specifically related to the production process. So if we compare the first two classifications, we can see that direct costs are always product costs, while the overheads can be either production costs or period costs. It depends if they are manufacturing or non-manufacturing overheads. Now let's move to the third classification that distinguishes between variable and fixed. So we have the variable versus the fixed costs. What's the distinction between them? They are very different because we have a cost. Let's start from the overall definition. We have a cost that is defined as variable if the overall cost increases in a proportional way if the quantity that is realized increases as well. On the opposite, if the total cost doesn't change with the increasing of the quantity, the cost is defined as fixed. Let's see this with the graphical representation that is easier. Assuming that we have on the horizontal axis the activity level. The activity level can be defined as a proxy of the quantity that is realized by the company, while on the vertical axis we have the total cost. The variable cost is defined as the cost that increases in a proportional way with the increases of the activity level. So basically the shape of the variable cost is the following. So if, coming back to the example of the table, if a company realizes 10 tables, this would be the level of the variable cost. If the number of tables realized would become 20, then the overall total cost will increase, and so on with the remaining. The higher the activity level of the company, the higher the overall total variable cost. And usually, if we think of the previous distinction between direct and indirect costs, direct costs, so the direct material and the direct labor, are the typical example of variable costs. If we have the wood, the higher the number of tables that we need to realize, the higher the overall cost of the wood, because we need to purchase a higher amount of wood. Now let's move to the second classification, which is the fixed cost. A cost is defined as fixed if the overall amount remains the same even though the activity level increases. So this is the shape of the fixed cost. So if we have the depreciation of our equipment, or if we have the rent of a warehouse, basically the overall value of the resources is not affected by the quantity that we are producing. So either we are producing 10 tables, 20 tables, 50 tables or so on, the overall depreciation of our equipment will be always the same, and also the cost of the supervisor will be always the same. So these are the fixed costs. And of course the shape is different if instead of reasoning in terms of total cost, we reason in terms of unitary cost. So let's see now the shape in the moment in which we have the unitary cost. So again, we have our activity level, so the quantity, and then we have the unitary cost. What's the shape of the variable cost? The shape of the variable cost, if we have the unitary value, will be the following. So this is the variable cost of 1 unit. So again, thinking of the wood, we have that the euro per tons will be always the same, whatever the quantity we are realizing, so it is not dependent on the quantity. We will have the opposite instead in the case of the fixed cost, because if we want to define the unitary value of the fixed cost, we need to divide the fixed cost by the quantity, by this quantity. So you can see that the higher the quantity that is realized, the lower the fixed cost. So the shape of the unitary fixed cost will be the following. It decreases in a proportional way with the increasing of the quantity. Again, thinking of the depreciation of a machine, the higher the unit that we are going to realize, the lower the unitary value of the depreciation that is assigned to our final product. If we want to be even more precise, in the distinction between variable and fixed cost, we can add a third classification. Let's say not a third classification, a third component, which is the cost can be variable, the cost can be fixed, but we can have also a category of cost that is defined as semi-variable. The shape of the semi-variable cost is the following. Semi-variable cost. As you can see from the shape, basically they have a component which is fixed and then a component which is variable. The typical example is the example of the utilities. We have a fixed rate which is paid for the lighting, the heating, and then the amount that is overall pay depends on the consumption. So the higher the usage of the machine, the higher the consumption of the utility itself. So they are in between what is fixed and what is variable. Let's try to see this with an example on the service. Assuming that you are you want to realize a party and you want to invite some people to the party and you want to define the overall cost of the party. Your activity level will be represented by the number of people that are going to come to your party. What would be the variable cost? The variable cost will be represented by drink, food, everything that is going to increase in the moment in which the number of people that are coming to the party will increase as well. Assuming that to the party you want to invite a boy band that is going to play some music, and you will have that the cost that you are going to pay the boy band will be of course the same, whatever the number of people that are going to come. As a semi-variable cost, you can have the example of someone who is in charge of selling the ticket for coming to the party. You are going to pay this guy as a fixed amount, and then he can receive an higher amount depending on the number of tickets that he's able to sell. So basically, this is the example of semi-variable, a fixed amount plus a component, let's say a sales commission that depends on the amount of tickets that he's able to sell. And basically, this is what can be defined as fixed and what can be defined as variable. Pay attention that in this case, the discriminating element is represented by the activity level, and it is not always represented by the quantity. It specifically depends on the case that you are analyzing.